Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
With us from BlackRock, Wei Lei in studio. Thrilled to have you here. With immense respect for your profound accomplishments as a kid. And you were in China and then you went to Singapore, right? Mm-hmm. It's somewhere. Did you go through the H-1B visa process years ago?
I didn't, because I'm based in London. Right now I have a L1A. I think I need to remember that as I get through custom every time.
What are your thoughts on this? I mean, you know, it's the bar charts are India with a huge impact, and then China is an impact. Away from the politics of it, what are your thoughts on it?
I think that represents near-term uncertainty, especially facing, I guess, smaller companies. I think this is another example why we have to focus on fundamentals and pricing power of large companies as we think about being selective.
The zeitgeist this weekend, you were wonderful on LinkedIn pushing back against it, is worry, AI, worry, more worry, AI. That's normal in a bull market, isn't it?
I think so. And I think it's worth remembering that bull markets do not die from valuation. And even if there's more focus around valuations right now, our study shows that it's not really as stretched as you would have expected. Looking at price appreciation, you look at Magnificent Seven right now at 32 times PE is actually lower than the level at the beginning of the year because of the very strong earnings delivery and earnings upgrade. So we think that there is more to go. Our study shows that for US tech more broadly, if they deliver earning in the region from 15% to 20%, their current multiples, maybe even higher than that, can be very well supported. And now you may ask, 15, 20, that sounds like a lot, but looking back 30 years, a quarter of those periods actually have seen US tech growing earnings that strongly, right? So, it's doable.
That's doable. I think the AI believers are firm believers in AI. How about the rest of the world, the 493 other stocks in the S&P 500? How do you guys approach those names?
Right now we're in this, let's call it lucky juncture, where we have the Fed restarting rate cut cycle, and the labor market is supporting that rate cut direction of travel without it then becoming a big political debate in terms of Fed independence, but also then what it means for long end of the curve and term premium. So right now, the Fed is restarting Fed rate cuts, and growth is holding up okay. We're looking at 1.5% for U.S. economy this year. It's very far from recession. Earnings are strong, so it's a good mix that can continue to support risk assets. Now, the question is just for how long this lucky combination will last. So we're very much paying attention to, if labor market deterioration is a precursor of something worse to come on the growth front. It's not our expectation, but, lots of uncertainty.
You say you're staying risk on. How does that apply to the fixed income market? Are you staying with it in the treasury market where you can get 4% for change on a 10-year, or do you take some credit risk here?
Our credit, we have had the preference for credit over long duration for a while, and you look at how IG spread is at close to multi-decade low, actually at multi-decade low. That has been a good call. But at this particular juncture, we do think that there is room to extend out duration exposure a little bit, because we see this lucky mix of labor market supporting Fed cuts, and just generally markets are focusing on that. So we want to lock in some of the attractive long duration real yields in the US.
In the technology juggernaut that you've led on, where is use of cash? Obviously, they're doing a CapEx. Does BlackRock see evidence of a return on invested capital from this CapEx balloon, or does that wait?
We have seen significant growth in our cash business because there is a huge amount of cash on the sideline from an investment portfolio perspective. But to your point about return on investment for CapEx deployment, that's actually one thing that we're paying close attention to understand if momentum of the AI trade could potentially shift, as we think about sectors outside of technology also kind of getting very focused around AI adoption as we go from capital light to capital intensive kind of deployment. It has significant impact on return on equity. So we're paying attention to return on all this CapEx spend, but it will take time.
What's the x-axis look like?
The x-axis is
27, 28, 29?
You mean in terms of return on investment?
When are we going to find out why Facebook is spending all that gajillions and it's going to be an ability to do an Excel spreadsheet at BlackRock to figure out what the return is?
I would say that actually it's remarkably hard to get precise number of return on investment for this CapEx because it's quite well hidden and they're not obligated to report them in a very precise form. But I would make the general observation that markets are letting them off the hook right now because it's really an existential build-out race. You are either spending and overspending to stay in the game and stay on the table, or you will be viewed as, well, you won't be part of the future mix, right? So I think markets are giving these tech companies some leeway to spend and overspend. We pay attention to free cash flow. As a percentage of free cash flow, it's gone up quite a bit in terms of the CapEx spend, but not to a level that they can't afford. Not to mention they can always tap into a funding market, public and private, to raise additional cash to spend, right? So like right now it's still early in this journey, and we see all systems go when it comes to AI build out.
How do you guys, as chief investment strategist, what screens well for you these days? Are you screening on industries, factors? How are you kind of looking at markets and opportunities these days broadly?
Well, we have liked growthy type of names because we want to focus on companies that can really give exposure to exponential growth opportunities related to AI. But we also just think broader market, given the lucky combination of Fed cuts, growth holding up okay, earnings are reasonably well delivered so far. That's supposed to broader market. Yeah, we focus on the tech and the AI complex, but generally we have an overweight to the broader U.S. equity market that includes the smaller caps compared to the mega tech companies. In the international market, we're more selective, right? Like so, in Europe we like defense, we like financials, we like industrials as a sector pick rather than across the board. You look at the emerging markets, like being selective would have paid off well so far this year as well. The Hang Seng Healthcare Index is up more than 100%.
Wow.
Are you flying into Heathrow today?
On Thursday, or maybe even over the weekend. I will decide if I stay for Ryder Cup.
They had traffic congestion or something. Some software went down.
Software, yeah.
I came in over the weekend. It was actually quite smooth. We'll see. Mr.
Fink, just go, Larry, can I get the Gulfstream? If it doesn't
Can you ask on my behalf?
I'll ask on your behalf. Wei Lei, thank you so much. She's with BlackRock. Can't say enough about her contribution to the zeitgeist on LinkedIn. She had a beautiful bar chart piecing together, showing this huge technology investment that's out there, and it's interesting to see, to say the least. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
A good time now with Jens Nordvig of Exante Data, all of his experience, including with Nomura and Goldman Sachs over the years. And it can be on foreign exchange, but, folks, of the 142 books that came out of the crisis, there were like 5 or 6 that had traction.
Okay.
Shout out to Andrew Ross Sorkin's book of 07. I thought was really good as he launches a new one here. The fall of the euro, reinventing the eurozone, Jens Nordvig was absolutely, I called it a primal scream. It was just, it was so visceral. You have to be from Denmark to do that.
Yep.
If you're from America, you're too polite. It was so visceral. If you were to rewrite a book on the euro now, what would you title it?
The challenges are still there. This challenge is still there.
Is eurosclerosis still in place?
We still have a weak growth dynamic. We've had a wake-up call this year, right? So we've had deflationary forces in Europe for the last 10 years, as we spoke about, and then we had the COVID shock and all of that changed. So that's gone, and then Germany have done something pretty dramatic, right, in terms of escaping the fiscal rules. So that was triggered by the U.S. policy change as well.
So it seems like Europe is trying to spend its way out of its malaise, whether it's induced by the U.S. change in policy. But I think there's questions about, all right, maybe Germany can get it done. Maybe even Poland can get it done because, boy, they're right in the backyard of Russia. It's in their best interest. But how about everybody else? What's the rest of Europe going to do in terms of trying to lift their spending levels?
Yeah. Like the fundamental issue is that we used to, in Europe, for many decades, to always have like the center of the politics was driving what was happening. So you had social democratic parties like a little bit to the left of center, and then you had another centrist party a little bit to the right of the center, but they more or less did the same type of policies and they agreed on most things. And now you don't have that anymore. You can see in France, like the center has like been annihilated.
What
right?
a mess.
Yeah, and it's in many different countries.
Is
at
it
the same
just
time.
another mess, or is there something original this time about more protest in Paris?
I think we're waiting for an election result where there's actually going to be one of these far right, far left parties coming to power. Like at the moment, the center is getting smaller and smaller, but still staying in power in almost all countries, right? So the real test will be when these non-centrist forces actually get into power, and they have to decide what they do. And I think in relation to your question, right, about military spending, right? So it's clearly going up across the whole of the EU, Germany leading, and the fear of Russia is driving that. But it's not every country. Like Spain is not doing much. So if you average it out, it's certainly not as dramatic as if you just look at Germany alone.
The U.S. dollar, we had the FX analyst from Citi in here, sitting in your seat just probably a half hour ago saying he's bullish on the U.S. dollar and he feels pretty empty, alone out there, pretty lonely out there. What's your view of the dollar? It has not bounced back like everything else seems to have bounced back.
Yeah. So there's a huge debate going on at the moment about, okay, what's happening with dollar hedging, right? So on our data platform, we have a whole section that's dedicated to this specifically, right? Because you can track it in many ways. There's been a lot of writing, including on Bloomberg in the last couple of weeks about, if you look at the ETF flows, they show a lot of people are buying U.S. assets, but with a hedge on top. I think it's very tricky to just use the ETFs because a lot of institutional flow don't happen in ETF space, right? So you can have pension funds that do big changes and you will not see anything in ETFs. So I think the big picture is the following. We've been through, 3 phases in terms of like dollar flows, where we came into this year, people still believed in US exceptionalism, still bought US stocks, tech was the dominant theme. Then we had all the policy uncertainty, reciprocal tariffs. We also had the German fiscal stimulus that people saw, okay, maybe there's an alternative, right? And we had a period where actually inflows into the US were smaller than inflows into other international competitors. And then in the last couple of months, it's like kind of like a gray zone. We're not back to US exceptionalism, but the US is recovering. There is a bit more flow coming in. So it's sort of a gray zone. So in my forecast for the dollar, I now put less weight on sort of very negative flows as a driver of the dollar. I put more weight on the Fed again. So since my company specializes in flow, maybe I'm kind of like undermining my own business.
That's good.
But we also do some Fed analysis, and that's really been the key. You can see it in the correlations. Like the dollar and U.S. interest rates,
Right.
super highly correlated again. There was no correlation at all in April, May.
Okay, I got to get quick because I'm doing Audible. What's your euro call here? 12 months.
I think we're going to be grinding higher. I think we're going to be
Grinding stronger.
I think the euro can be
Right.
grinding
I love
higher.
this difference of opinion.
Yeah.
It's great.
Yeah.
Okay,
Yeah.
we're doing Audible. Jens Nordvig with us right now. And again, his book was just absolutely fabulous. I learned this the hard way. Patrick O'Brien wrote a book called The Surgeon's Mate. In America, most people study the Baltic Sea for 2 days in 9th grade, and that's a combined knowledge. We don't have any understanding of the world you grew up in. Copenhagen by boat, 1,600 miles from Russia, St. Petersburg, the Baltic states. We've got testing of Russian planes in Estonia right now. It barely moves the needle here. In America, I want you to explain to our American audience here that this ginormous brackish Baltic Sea with Denmark at the isthmus of it where you come out, the importance of that to the Western Alliance.
Well, maybe I'll give you a 1-minute history lesson.
Please.
So all the traffic that comes by ship from Russia, Poland, Baltic nations, so forth, have to go through a tiny little gap between Sweden and Denmark. The reason why Copenhagen used to be a very wealthy city was that they collected taxes from all those ships, and they had a cannon in place, so if they didn't pay the tax, they would just shoot the ship down. And that's literally the reason why Copenhagen was a wealthy city very early on. And obviously, now we have tension in the Baltic Sea, right? Because we have,
Undersea cables and all that.
Undersea military aircraft doing things they're not supposed to do. So there's a lot of tension in that area. Like one card that Western nations could play was to actually control. If they really wanted to control that waters, like logistically, they used to do it with one cannon. Right. So it could be done. I think part of the problem we have in the EU in relation to Russia is that the EU and the European countries are so afraid to escalate, right, that those cards that they actually have, that could be very powerful cards, are just they're not being played, but they're not even being talked about. That was a more than 1 minute, but they gave you a little bit of history
that's great,
there.
because we got the Greenland distraction. Who's winning in Greenland today? Is it the U.S. or Denmark? I mean, we've got this whole Greenland distraction. Meanwhile, we have jets over NATO countries. I mean, it is bizarre right now. Denmark is building up their military capabilities, right?
That's right. There's been just an investment into air defense system, like multi-million investment.
Right.
And the interesting part about that was that it was announced as investment that also had offensive capability.
Right.
Because the prime minister essentially said, like, there's no point in if you only have defenses, then
right.
how are you going to scare the aggressor?
Along that line with the technology of Stockholm and, Nokia years ago in that, are you a believer that Europe can get their technology act together?
I think you're seeing some signs of hope in countries like Germany, where there's actually a bunch of AI startups in robotics, AI robotics. Some people call it real world AI, right? Mm-hmm. Not just in a digital domain. Yep. So I think the resource that Europe still has is that we have an education system that still delivers a lot of well-educated engineers, computer scientists, and so forth. So the human resource material is there. Maybe it will matter if fewer of those people go to the United States and get an H-1B visa, right? So there's all these different things happening right now where the sort of relative force of the different labor market is shifting.
Did you have an H-1B visa when you first came here?
I did not. No, I did. I was with Goldman Sachs in London, and I did a transfer with Goldman Sachs, so that's a different visa situation.
Excuse me. The embassy at Goldman Sachs has their own
Goldman
process.
Sachs picks up a phone and it's done. Just talk to us from when you're talking to your clients globally. What's the level of concern, if any, about the independence of the U.S. Federal Reserve these days?
Well, very, very elevated concern. I have a lot of clients around the world, right, that invest in macro assets on a very broad basis, including emerging market assets. And those investors have a lot of experience and a lot of, lessons that they've drawn from being involved in countries where central bank independence was a real problem, and it caused massive asset moves when essentially the government took over the central bank or forced the central bank to do certain things. We've seen that in Turkey, right, where the government has pushed through certain too easy monetary policy, right, and the currency has seen disastrous depreciation. So people have those lessons in the back of the head, right, and then it's a matter of, okay, what degree are we going down this path? We've certainly already taken a step down this path, right? You can see it in the dot plot, right? You had a new governor, right, that had a dot that was totally out of whack with all the other dots, right? So it's very clear that we're going that direction. But the question is whether it's going to really drive policy, right? You also saw that we only had one dissent.
Yep.
So it's almost like the voting members of the FOMC decided mostly to say, okay, we're actually going to try to show a degree of consensus. There's one dot we cannot do anything about, but we're trying to do a degree of consensus about that.
Audible, we got to get this in before we go to Michael Barr. One quick question. Besant of the Treasury is out with a wide set of headlines. U.S. is ready to do what's needed to support Argentina. In a tweet, the secretary said they want to make Argentina great again.
Okay.
Are you long the Argentinian peso because we're going to bail out Argentina?
This is really interesting. We have a situation, right, where the United States kind of has a fight with Brazil, including tariff, very elevated tariff from Brazil that are mostly based on a political tension with what has happened to Bolsonaro. Yeah. Right, and now we have a situation where Argentina potentially might get very favorable treatment, something that really has potentially not happened since the Clinton bailout of Mexico. So very rare, and it's happening because they like the leadership in Argentina.
Playoff Brazil.
So it becomes a situation where it's the relationships at the highest level in government, including internationally, that might determine really who gets tariffs, who gets support. Mm-hmm. And this is a new regime we're in. This would have not happened like this a couple of months ago. What should we say? 7 months ago. So new regime.
Don't be a stranger. Jens Nordvig, thank you so much. Exante Data. Can't say enough about his book of a decade ago plus on the euro. We look for another one out here. If Mrs. Nordvig will allow him to write volume 4 or whatever it is. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Michelle Meyer with us, the Mastercard. It's the first look at the holiday season. I'm going to round up the numbers because it's Monday. Online shopping up 8%. Store shopping up 2%. Is that because the technology and we like our Amazon boxes, or is there a backstory to that at Mastercard?
I mean, I think the technology and the digitalization of the retail space has been happening for years, and that has been driving e-commerce to see faster growth rates for the last few years. But I do think there also is a specific story this year, which is around tariffs, and the need to have even greater price discovery. For consumers that are facing varied prices, depending on that sensitivity to tariffs, they're going to want to be able to get the best deal that's out there and find that value, and you can do a lot more of that online.
So how is the consumer here? We had some retail sales that look pretty darn solid. So how do you view the consumer these days?
I mean, I think the data is speaking really loudly right now, which is that consumers are still engaged in spending. You see it, as you just noted, in the Census Bureau retail sales reports the last few months, showing some real healthy spend trends. And we see it in our own insights as well with our spending pulse data that showed acceleration throughout the summer. So yes, consumers are making choices in how they're using their purchasing power. And I think a lot of that has to do with where, again, they find the most value. They're trying to navigate the tariff environment to the best of their ability. And the sales numbers that we're looking at are, of course, nominal sales. And we are starting to see a little bit higher goods inflation than certainly we saw this time last year.
I mean, you break it down in your special Mastercard report with smiling people on the cover because they're happy they start shopping in September. Artificial Christmas trees, the tariff is 27%. Glenn, you're like the budget lab at Yale. I mean, what is the calculation of tariff impact right now?
Absolutely. So we looked at just the data that the Census Bureau reports in terms of the tariff rate by really granular category, because that's what we like to do. We like to go really deep in terms of understanding consumer spending by different categories. And certainly you are seeing some, like artificial trees, stood out as one where tariffs are significantly higher than this time last year. So consumers have to make decisions. If they do indeed see some of those tariff increases passed on to them, and that's a question of if, because retailers are also trying to navigate this, then they'll have to decide if they want to allocate more of their dollars to getting that Christmas tree or do something different. So there's going to be a certain amount of substitution when and where it's possible to do that based off of where tariffs are kicking in and showing up in the data.
So your forecast, how do you think the holiday season will shape up? How do you think spending will be this holiday season?
So Tom gave the breakdown between e-commerce and in-store, but to give the overall numbers, we're looking for 3.6% retail sales ex autos, which is measured
That's pretty good.
From, it's November 1st to December 24th, knowing that, of course, the holiday season starts even earlier. We think it's kicking off now, but just for consistency.
It's a disgrace. It should start the Friday after Thanksgiving.
Yes.
It
with
used
you
to.
there.
Things have changed. That's still a big day, of course. Black Friday period is super important, and we'll be monitoring it really closely to understand the trends for the season.
All right, Michelle, thank you so much. Appreciate that. Michelle Meyer joining us here in our studio. Michelle Meyer is the Chief Economist, North America for Mastercard Economics Institute. Boy, if they don't have a finger on the pulse of spending, I don't know who doesn't. I mean, I'll be throwing down the card every once in a while.
Do you get to go to Formula One like McLaren? Do you get to go? Are you going to Las Vegas?
Austin. I went to Vegas last year.
You're going to Austin?
You weren't kidding here.
No.
Oh, yeah, it's McLaren. Yeah.
Have you met Lando and Oscar?
Yes.
Yes?
Yes. It's very
Who
cool.
do you root for?
All of the above.
Oh, stop. Who do you root for?
Would you like an invite?
Sarah Eisen is gaga over
Sarah
Oscar. Come on. Oscar or Lando? We need to know.
Maybe Lando a little bit more, but Oscar's great too. I don't want to, anybody wearing those McLaren colors, I'm in.
Bottle it. Michelle Meyer.
Yep.
A Lando crush. That's what I learned today. She is the chief economist. I'll carry your bags. The Louis Vuitton luggage you've got to Austin, I'll carry your bags. Michelle Meyer, thank you so much. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
What a great set of conversations today on this H-1B uproar. Thank you, Josh Wingrove and our team in Washington who broke that story. Huge impact by Bloomberg News and our White House correspondents over the weekend. We continue strong with Gautam Mukunda joining us from Bloomberg Opinion and also at Yale School of Management. Okay, you grew up in America, but you know the entire H-1B maelstrom and all that. 150,000 engineering graduates in America, 10 times that, 8 times that, whatever, in India. I get the people that want Americans to have jobs, but in your study, is there any way American engineering talent can make what percent of the present H-1B pool?
So it's not even close. So H-1Bs are a huge supplement, and because they're so hard to get, they're particularly sort of value added.
Right.
What we actually see from H-1Bs is they create jobs for American engineers because that makes it easier to create companies. It makes it easier to lead in high-skilled industries. And so it's not a zero-sum game. They don't push out American engineers.
Okay, but help our audience. If there's 100 jobs created, how many can be people from Georgia Tech, Texas A&M, Caltech? Is it like 20, 30? Is it 89 out of 100?
So in the U.S., so you're saying as the proportion of the H-1Bs?
If we eliminate H-1B, how many of those 100 H-1B jobs are going to be taken by American engineers? Till we run out of engineers.
Yeah, so one is we've run out of engineers. So the problem isn't just that. It's that, maybe 20 or 30 of those were taken. It's that
20 or 30.
But then we would lose 50 or 60 other American engineering jobs from companies that aren't created, that don't grow because they don't have access to this engineering talent. The total number of the total employment for American engineers in the United States will go down, not up because of this.
Presumably, the tech industry is one of the ones, if not the most impacted here. Yet I don't hear much from technology leaders. In fact, I see them accompanying the president at various events, including over in London last week for his state visit. Are you surprised that we haven't seen pushback from maybe some corporate leadership or just some other business entities?
No, for two reasons. The first is fear, right? Like if you talk to corporate leaders, and you'll starting to see people. There was the Yale CEO Summit recently where this was just the consensus in the room. Everybody is unhappy, and no one wants to say anything about it because they think the president will come after them if they do. So fear is a real component here. But the second is the way this is structured is interesting in the way it's done, right? So there's this $100,000 fee, which can be waived at the president's discretion for any reason. So in a real sense, what this does is just create a huge incentive to cultivate the president. And it also really helps sort of big incumbent companies over small, scrappy ones. Both of those, if you're a major CEO leader, you might decide your interests are go along.
Tariffs, I'm not sure where you are. I think the courts are taking a look at these things. What's your view of kind of where we are here? Because I think the Supreme Court's going to have some type of say here.
It's absolutely going to have some type of say. And the Supreme Court has sort of, to an unprecedented extent, given deference to the Trump administration in a way that we just haven't seen this before in the modern era, in ways that are pretty surprising, that even other judges are starting to call out as this is inappropriate. So we don't know what they will do. And anyone's guess is good on that. I think the law, most legal analysts think that the law says that these tariffs have to be overturned, but we don't know. But even if they are, the Trump administration has ways to reimpose them. So unfortunately, the court is actually increasing the level of uncertainty that's attached to the tariffs, not decreasing it.
Gautam Mukunda with us, Yale University, a great set of books out on presidential politics here on our talent. I take immense umbrage about a huge body of Americans don't understand the engineering heritage of many of our schools. How many people actually know there's Yale engineering with all of that 19th century heritage? So if I'm taking physics 420, thermodynamics, and statistical mechanics, this is not an easy A, is it? No, it's not. Okay, fine. So if I'm doing entropy at Yale, is the Indian education superior and more rigorous than across America engineering?
So the median Indian education isn't, but there are a lot of Indians. There are 1.4 billion of them. If you're talking about the people who are going to the IITs and places like that, my mother was both her undergrad and her PhD was from IIT Kanpur.
Did she come here in an H-1B?
She came here. She did not come here on an H-1B. She came here in the early 70s. Married.
But she got off an airplane somewhere. Did she take an American job when she came here?
So she took a job in the United States, but she did not take an American job because her skill set was such that she was essentially the only person in the world who was able to do the work that she did for NASA. And so every single program, every single American spacecraft that involved nuclear power in space went through her at some point over the course of her 40-year career. It literally 100%.
Did she think we could use nuclear propulsion to go to Mars? This was a raging dinner table conversation. like buns and rolls were thrown over this. Is it her fault that we were supposed to develop nuclear rocketry rather to go to Mars?
It's not. It's actually a treaty problem. But I will say, when the Martian came out, one of the probes in the Martian is actually the last mission she helped design.
Very
and so
cool.
When she saw it, I got a 4-page technical analysis of the movie from her.
clicked it.
Yeah.
You read it.
I loved it. I thought it was great.
Dad, thanks for sending this to me.
But this is actually a key thing, right? This is taking a skill set from India, right? So India, at the time, one of the world's poorest countries, at ruinous expense, educated America's finest scientists and engineers and sent them here. This is a phenomenal deal for the United States. The idea, every country in the world would kill to get the best graduates of the IITs there, right? Like that is an asset of incalculable value. And instead, we seem to be throwing it away. It is a decision that makes no sense on any level of the national interest.
So what do you think, how do you think this is going to play out? I mean, I'm sure it's a topic of conversation at Yale, at Harvard, and all the places you hang your hat. How do you think this is going to play out?
So one is there's going to be a lot of pushback. For example, a lot of these people are like surgical residents. Mm-hmm. We already have a doctor shortage in the United States. People don't know this, but the United States has fewer doctors per capita than any other industrialized country.
We got to cut to this. This is brilliant. We have to have you back again, Gautam, just on this. If the president does this, how does it change an American's life at Georgia Tech Engineering or at Yale Engineering?
So one is these schools these schools become less attractive to foreign students because a lot of them come in the expectation they will be able to stay in the United States with an H-1B visa, which they find an incredibly attractive prospect. So first, American schools, which have historically gotten the best talent in the world, are going to find it harder to do that. And that's a big problem because those schools are the ones that produce the new technologies that are the foundation for new industries and new companies. So you want them to keep spilling out. You want them to have the best global talent. So second, companies are going to be more likely, not less likely, they're going to be more likely to outsource American technology jobs outside the United States because if they can't get the labor here, they can get it in India. So you're going to see more outsourcing and more offshoring for the sorts of jobs that we actually desperately want to be here.
Or Microsoft setting up more in the United Kingdom with the president's visit.
Yeah.
This is brilliant. Gautam, thank you so much. With Yale University, can't say enough about it. We'll do this again. I mean, that was a nerd fest. But it was, Did you watch The Martian?
Yeah, awesome.
My mother said my father was literally crying during the movie.
Yep.
They got so many things right.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.